Hello, everybody, and welcome to another episode of the Caregiver's Toolbox, Tools for Everyday Caregiving, where we give you information and education on senior care topics. My name is Ryan McAniff. I am the owner of Minute Women Home Care, a private agency in Lexington, Massachusetts. I am also the host of this amazing show, probably the greatest podcast of all time, but nobody's really sharing that right now. I do have an amazing guest with me today, a friend of mine, which we can joke around about this, but his name is Mike Harrington. He's the owner of Lifetime Insurance Planning, focuses on a number of different products and services, but does an outstanding job in helping his clients. Mike, what is going on? How are you today?
I'm doing great. It's a beautiful fall day here in New England. I'm hoping this weather stays as it is for as long as possible. It's really nice out today.
Without a doubt, especially for our own enjoyment of being able to go outside, and it feels like the warmer it is up here, probably the one more warm day means one more day that COVID doesn't sneak up on us and start growing, unfortunately.
Absolutely.
So just to start this out, what do you do so that we can get into the podcast? But you're obviously insurance, that's the name of your company, but explain to people what kind of insurances you provide and what you do.
Sure. Thanks, Ryan. So I focus on a few practice areas. First, employee benefits for small businesses. And my sweet spot is working with small businesses, white collar, blue collar startups, anywhere from about 5 full-time employees up to about 20 or 25 full-time employees. There's a real niche in that space, and I'm able to help those folks, business owners, with full suite of insurance products that are available to them just as they would be to a large Fortune 500 corporation. Now, that's not to say that they always go for a full suite of benefit packages. Often it could just be a health and dental plan and a vision plan, for example. But certainly there's a full suite of products available, such as group life insurance, group disability, group critical illness. So I try to work with my clients. Obviously, small businesses have different budgets than a large company does. So I'm helping those folks put together a plan that helps them attract and retain employees, but also keeping their budget in mind.
Oh, that's outstanding. So you can work with businesses of any size once they're over a few people, but your sweet spot's kind of those smaller businesses.
That's right. Yeah, that's right. I always use this analogy, Ryan. If I had a twin brother that owned a business and had 500 employees, I would not be the right fit for that person. I do partner with some larger benefit firms, and I would, pass it on as a referral, make an introduction for those types of people. And then the other areas that I really focus on, and it's, can be business owners, but it could be just an average person. 3 focus areas. One is disability insurance, which is protecting your income. Kind of been a newer trend of calling that it's income protection, which is generally protecting 60 to 70% of your income in the event you can't work due to an illness or an injury. It doesn't have to be permanent. Typically there's like a 90-day wait period for that type of plan to pay a benefit. Although it's available, you can have a 60-day or a 30-day wait period. So disability insurance is one. Life insurance is a big focus area for myself, for business owners, families, young families, but also for older people as well in terms of estate planning. I've done actually several larger life insurance cases for non-resident foreign nationals. And that's become a real interest of mine because for those folks, estate tax planning and consequences are much different than, say, for a resident of the United States. And it gets kind of quite complex, or can get complex, but that's been a big area of focus for me over the last couple of years. And then finally, the last area I focus on is long-term care planning. And long-term care planning is essentially using insurance as a way to leverage your dollars to get a much larger pool of benefits. So you're paying typically an annual premium. Certainly it could be a monthly or quarterly premium, but you're paying a premium, a specific amount of money, to generate a pool of money that can be used in the event that you need care. And the care could be received at home or in assisted living or in a nursing home setting.
Absolutely. And you know, one of the things that, you know, we focus on seniors here and senior education. So, you know, one thing that I would like to jump into a little bit is the long-term care insurance. The long-term care insurance seems to have a pretty interesting story behind it. There seemed to be a time where policies were being given out and the insurance companies didn't realize people were going to live as long as they did. They didn't realize how expensive health services were going to be. And then they kind of lost their shirt on things. And then the kind of pendulum swung in the other direction where policies got a little bit more expensive or a lot more expensive and much more restrictive. And then it seems like the pendulum swung back in the other direction where it's a little bit more even now and they kind of understand the market and they're more priced correctly. You know, they're obviously looking to make money. It's a for-profit business, but they also need to accurately understand what the market's going to be. So and the reason I bring that up is I've really kind of, before I was a little bit sour on long-term care insurance, but now I'm much more pro with it because there have been a lot of changes that happened in the last few years that have made it very, not only just affordable, but it made it consumer friendly. And I didn't know if you could speak to a couple of those things. One of them being you can get some of your money back if you don't use your policy, and some of the things that have changed in the last few years that I think make it much more likely people would be interested in long-term care insurance.
Yeah, no, Ryan, you just hit on a lot of really good points, all valid points. And, you know, to answer your question directly, that last point, what you're referring to there is like a hybrid policy.
All right.
And the way a hybrid policy works is, again, typically you're making an annual payment. Although some companies, you can do like a 10 pay, meaning you're paying 10 payments. Or you can make a single pay. So one single payment and you're done paying for that policy. But the idea behind that is, however you make that payment, there's a specified pool of money to be used for long-term care. And for the sake of the argument, if you never need care and you pass away, that amount is left as a death benefit to, you know, your loved ones. And often it's a second to die policy. What that means is, if you can picture a married couple and they get a hybrid policy, a joint policy, and the husband passes away first, those funds are still available for the wife. If the wife needs care, those funds are sitting there to be used. If the wife never needs care, so there's never any care needed, again, that is passed, those funds are passed on as a life insurance benefit. So certainly people who don't like the idea of just potentially writing a check and not getting any benefit out of it, people with that mindset often would choose a hybrid policy. And what people like about that is, again, it's a set schedule. Those amounts shown in the contract are guaranteed. They're not going to change. So that is certainly one way of going about it. Now, traditional long-term care, I always, when I'm kind of sitting with a couple for the first time or an individual, heck, I'll take myself as an example. I'm a single person. I own my own long-term care insurance policy, and I pay it like I pay my auto insurance. Now, the only difference, my auto insurance, I pay with one check on an annual basis. My long-term care policy, I just chose to pay quarterly. And my long-term care policy costs almost the exact same amount of money as my auto policy does. Now, I bought mine at a younger age than the average person buys a long-term care policy, but just trying to show that these policies can be quite affordable and they're quite customizable. So with long-term care insurance, picture your auto insurance or your homeowner's insurance, you're paying a certain amount of money. And if you never need care, you don't get anything out of it. Same thing with your homeowners. And you write a check for your homeowners. If a tree doesn't fall on your house or you don't have a fire, you don't get anything out of it. And that's the way those types of policies work.
Yeah, and it's where Where I liked it is that it's giving people options. That's the benefit, is that, before it felt like it was one way about going about things. And now that there's hybrid policies and options for people starting earlier, meaning a younger age like you did, there's
Yep.
options for people that are starting at an older age, and there's things in between. And I think that as we realize that we're going to continue to grow older and older and live longer and longer, they're going to be there. I think there's a lot of interest. Are you finding over the last few years that there's been a lot more interest in those types of benefits because people are now seeing the boomer generation getting into their 70s and maybe needing home care?
Absolutely, Ryan. Yeah. And, if we look at life expectancy, and, I don't know the exact numbers, but just take Social Security as an example, right? When Social Security was started, I think the life expectancy was about 62 years old for a man. Now it's into the early 80s. So it's, that's 20 years difference, right? And as you said, with people living longer, there's certainly more. What I believe is there's more recognition that there's a need for these types of services. And going back to what you said about potentially older people or people using these or buying these when they're older, or having them customizable. I'll give you an example. Just a couple of years ago, I had a client, a couple. They were 62 and 61, I believe, but early 60s regardless. And we evaluated a few different policies. They had met with another advisor. One thing I should have probably pointed out is I'm an independent advisor, right? So that means I can sell policies and of different type of policies from dozens of companies, literally dozens of companies. So this couple had met with an advisor that only worked for one company, was only offering them one product. But nonetheless, what ended up happening with this couple is because of a medical issue that one of them had, that person could not qualify for traditional long-term care. Okay. And the husband could. The husband ended up going with that traditional long-term care policy. And then what I did, the wife actually applied for a hybrid policy. So you had, one couple with two separate policies, and it worked out great for them. And the ironic thing was, I don't know, maybe 6 months later, I saw the gentleman, and he remarked, and he said, "Hey, I really like my wife's policy." And I said, "Well, there's pros and cons, right? You just never know what's going to happen." Then lo and behold, that person actually, for the policy, she did a hybrid, a single payment hybrid. So she just wrote a check for the policy, and she was done. Well, what happens 4 or 5 months later? The stock market crashed in March, right, when coronavirus. So they were thinking, oh, we can just keep this money here. We'll invest it in the stock market, leave it invested in the stock market. Well, she wrote a check for $50,000. At that specific time, when the stock market crashed, she was probably like, oh my God, that's that's great. We didn't really lose anything, because that $50,000 probably would have been worth, $30,000 or $35,000. So of course, the stock market's gone back up and all that other stuff, but it just shows the way you can pursue different policies for people in the same household.
Yeah, and that kind of is important to realize, is that it's got to be your comfort level. There are some people that don't want to take that want to take the risk and say, "Hey, listen, I'll deal with that if and when that comes." And there are other people that say, "Hey, listen, I don't want to be a burden, or as little of a burden as possible on my family members, especially financially. And this can pay for private home care, and this can pay for assisted living services." Is there anything else that it pays for that I'm not aware of? I thought it was mainly home care and assisted living.
Home care, assisted living, and nursing home.
All right, so it will pay for a nursing home.
Absolutely, yeah.
All
So
right.
so all the policies have to cover all three of those. So all traditional long-term policies have to provide services in those facilities. Again, nursing home, assisted living, or home care. And now this is where there's quite a bit of variation. Most policies are what are called reimbursement policy. What that means is that the policy is going to pay out a specified amount on a monthly basis or an annual basis. But either way, it's specified in the schedule. And the way a reimbursement policy works is you're essentially holding on to receipts. And for this, to keep it simple, say someone's living in assisted living and that assisted living costs $6,500 and the assisted living sends a bill for $6,500. You're going to make the check, you're going to pay the assisted living, and then you're going to get reimbursed from the insurance company for whatever your policy asks or provides for. The other is the other way to go about it, which is less common, but there are several companies that sell these policies. It's called indemnity. So an indemnity policy, again, it's specified. The policy is says it's going to pay, you know, $5,000 a month or $8,000 a month, whatever that amount is. And if you go on claim, and we'll use Alzheimer's because it's a very common situation in these circumstances. If someone's diagnosed with Alzheimer's, it's not curable. You're not getting better. And that alone, severe cognitive impairment as a result of Alzheimer's is going to trigger a claim. And the policyholder, just by providing medical records and information from the doctor, is going to now start getting a check on a monthly basis, no receipts necessary. The nice thing about the indemnity policy is it will pay up to that specified amount. So again, we'll use $5,000 as an example. You can get $5,000 a month, but just say in November, you only need $2,000 a month. You just ask for $2,000. So the rest of that money resides in that policy. You're capped at the ceiling, but there's no floor, so to speak. So it can be very, very useful.
And one of the things most people, at least in the home care side of things, they need to realize is that one, I'm going to say the wrong term, but you're going to know what I mean. There's a 90-day waiting period, or what's the official?
Elimination period.
Elimination period. And then with private home care, you usually need to qualify, you need to have somewhere between the need for 2 and sometimes up to 5 ADLs have to be, or you no longer can do them on your own. Isn't that correct?
That's correct. So it's typically severe cognitive impairment, but again, there's uniformity now. So it's severe cognitive impairment or 2 of 6 ADLs. And you're right about typically a typical policy would have a 90-day wait period. And I'm talking about traditional long-term care. But I'll give you an example. With my specific policy, I can get cash benefit with no wait period. There are, and I'll give you another example. There are products, a very, very popular product that there's no wait period. Day one, you make the claim, there's no wait period for any type of care. That same product, it doesn't matter if you're a smoker or a non-smoker, the rate's the same. So if I'm talking to someone, they said, hey, I'm a smoker, almost always I'm going to recommend that company's product because the rate is so much more beneficial versus going to a different carrier and that person being a smoker, they're going to get charged smoker rate. So there's all different types of policies with the wait period. And everything you just outlined, it's very common to talk about, right? And what I tell people, and I'm not a tax guy by any means. I don't even follow the tax code anymore. I use an accountant. But I tell people once a month, pick a date, sometime away from April, maybe in the fall is a good time, but pick a date and review your policy and understand it. What's my wait period? What's my amount? So every year I get a statement from my long-term care insurance company. My policy started with a $5,000 a month benefit. Now I've had it for a couple of years. That $5,000 a month, that benefit has now increased 3% a year. So they send me a statement every year. So I look at it, I have it tucked away, and I always suggest that people keep an eye on that information. Make sure you have a family member that knows you have these types of policies.
Yeah, absolutely. And there are a lot of people, like we'll get people that find out months after they've been using our services that they have long-term care insurance, and then they're asking us to come up with documents that we never knew we were going to need to come up with. and they might be out thousands of dollars because they didn't know that there was a long-term care insurance policy
Yeah.
involved in that.
Yep.
And that can always be a very difficult scenario to be in because, hey, listen, you didn't let us know. So when we work with families, we now always, this happened years ago when this occurred, but we always ask up front, hey, do you have long-term care insurance? That way, if they say no, okay, you don't have it. But you should look into this. If make sure that you don't have it, or find this out, because you don't want to get 6 months down the line and then you have to start your 90-day elimination period because you didn't realize that you had that policy. Because
Absolutely.
every insurance company, and like you said, you're an intermediary, but every insurance company is a little different on what they want, what information they need, how they go about that process. So as a home care company, we need to tailor that to the individual insurance company a little bit. It's not like a complete overhaul, but some like things differently than others. And then the other thing that I thought maybe you can mention a little bit is that I know it happens a decent amount in private home care, but I don't know about assisted livings, but it's the assignment of benefits. And that seems to be more and more popular. We're finding where people want hands off. Hey, listen, you just talk with the insurance company and do that. Do you find a lot of people are interested in assignment of benefits now, or is that really not the case?
No, I think you're accurate there. Specifically because a lot of times maybe there's only one of the spouse left, right? Maybe there was a married couple and one of the spouses has passed away. So now you have an elderly parent with one or two children, and typically there's one child who's kind of managing things, and that's hard enough, right? That's hard enough for that child, that adult child, to kind of manage their parent or help their parent. So if there's anything that can be taken off their plate to make their lives easier, absolutely, that can be very helpful, because it's a hard job. It's a hard job caring for elderly people. And your company provides care and home services for people. But typically there's a family member that's kind of the point person, right? That's saying, okay, we know that we need to provide help to our mom or dad. We need someone to come in here and help them, right? So there's a point person. That same person maybe is taking their parent to doctor's appointments. So anything they can do to take any sort of chore or errand or stress off their plate is a wise decision, I think, because it's a hard thing to do.
And just so people know, an assignment of benefits is when a policyholder allows somebody like me, a private agency, to directly bill the insurance company, and then the insurance company can directly pay me for the services that I'm providing. Some people don't like to give up that because they want that control of knowing exactly what's going in and coming out. Not that we can't let them know that. I mean, they're still left in the loop. It allows people not to have to wait for a reimbursement. And so they're not floating the money for the insurance company to reimburse them for. And so if money is tight, then that makes life a lot easier. Or if it's something where you're going to need home care for the next indefinite future, and the hours aren't going to change, you're getting this amount of hours week in and week out, it's just one less thing that's on your plate. But some people like it, some people don't, but I'm finding more and more people are enjoying it. And so the other thing that I wanted to ask you about is people talk about is with life insurance. With we all have to die one day, right? Well, that's all something that we're going to do. And as things get more expensive, healthcare is getting more expensive, buying a house is more expensive. We are looking at the first time in the United States where the older generation is the younger generation is not going to be as affluent as the older generation that came before it. What is your feeling with life insurance? Obviously you sell it, so you're pro life insurance, but are you finding that a lot of people are worried about that? And what are the different products and different things that people can look at for trying to make sure that when they pass away, something is given to they're generally their spouse or their kids.
Yeah, no, I am pro life insurance. The harsh reality is I've seen people not properly prepared and have to use GoFundMe's. I think we probably all have. That said, most of the insurance I sell, most of the life insurance I sell is term insurance. And generally speaking, term insurance is incredibly affordable. Most of the insurance I have, most of the life insurance I have, if you looked at it, it's term insurance, very affordable. I do have a permanent policy, and I utilize a permanent policy kind of as a hedge. So just as an example, if you are able to acquire a permanent life insurance policy at a younger age, and I'm not advocating not investing in a 401k. Most of my investments are in, mutual funds, just like most of my life insurance is in term insurance. But if you're able to acquire a permanent life insurance policy as a hedge, and permanent life insurance policies can have chronic illness or long-term care riders. And so they function very much like the hybrid policies do, meaning that, just for simplicity's sake, if you have a $100,000 death benefit, your life insurance policy, and you have a chronic illness rider, typically you can accelerate up to 4% of that policy if needed for home care, home health aid, nursing home, assisted living, the same triggers, right? So now if you picture you've done that, you've acquired the policy at a young age, it's a lot cheaper when you're younger, it's building cash value over time. And what do we do when we get older, when we retire? We have a shift in our investment focus. We shift to less riskier investments. Maybe the allocation is changed to a 50-50 portfolio. That life insurance policy, if you've never used it for long-term care and you've kept paying the premiums, it's typically built some cash in there. And now as we age and we're 65 or 70, we still have that life insurance, and that can be used as a hedge. So we're not always invested all of our money in the stock market when we're 65 and 70. So it's kind of like a Swiss Army knife, because it provides a death benefit. It has chronic illness or long-term care benefits, and it has some cash value. So it's a very unique tool, and most carriers offer products like that with a chronic illness rider. In some carriers, and this varies by state because insurance is regulated on a state basis, but there's some carriers in Massachusetts, for example, you can even buy term policies with those types of benefits. Now they're going to function a little bit differently because they're a term policy, but the point is you can still get some sort of a benefit if you have a chronic illness or an illness like cancer. So it's utilizing and planning ahead, and it kind of maximizes our return. And again, I'm not advocating that you put all your money in a life insurance policy by any means, but it's a hedge. The other thing is there's millions and millions of dollars in permanent life insurance policy sitting there. So just as an example, say if there was a couple that bought a permanent policy when they were younger, and now that maybe they're 75 years old and one of the spouses has passed on, that policy, and we'll just use an example, say that policy is for $1 million, and say there's $180,000 in cash value there. One of the spouses has passed on, the other spouse needs care, and maybe that spouse has some severe illnesses, so their life expectancy isn't very long, and they don't have a lot of other assets. That life insurance policy can actually be sold on a secondary market, and typically, the older we are, the sicker we are, that policy is going to be worth significantly more on the secondary market than it is from the cash value. So again, say that life insurance policy can be sold now for $400,000 instead of surrendered for $180,000 or taking the $180,000 in cash value. You've just gained a significant amount of money to fund long-term care expenses, home health care, for example. And a lot of people aren't even aware of this. And it's a pretty vibrant secondary market. And I do help people with that as well.
That's pretty wild. I mean,
Yeah.
I bet you most people don't know there's a secondary market for all those types of things.
They don't, and they oftentimes they surrender the policy. Now, it's kind of like when we're going back and we're talking about long-term care insurance. It's not something you just decide in 5 minutes. Because first of all, insurance company, they're going to request medical records. They're going to make an evaluation on your life expectancy, and say, okay, based on this person's current condition and our review of that person's medical records, our offer is X. And if that offer is not suitable for that person, then they wouldn't accept the policy. Or maybe the life insurance proceeds at death, the benefit of that, the utility of that is going to outweigh paying or surrendering the policy or selling the policy. So every situation is unique.
Absolutely. And I am sure all the Dave Ramsey listeners will be happy that you're talking term life insurance rather than whole, right? Him and his fans are anti-whole life insurance as much as one can be, right?
Yeah, absolutely.
Well, excellent. Well, Mike, how do people reach out to you if they're interested in talking to you, learning more, and getting information on different policies?
Yep. Well, I can be reached on social media. I have a Facebook business page, Lifetime Insurance Planning. I'm on Twitter, Lifetime Insurance Planning. I have a website. It's www.lifetimeip.com. Of course, email mike@lifetimeip.com, and I can certainly be reached by phone as well. So I'm always available. I work regular business hours, but I do evening appointments and weekend appointments on occasion as well.
Awesome. Well, Mike, thank you so much. I will put your contact information in the show notes as well. But, I really appreciate you coming on, telling us a little bit about yourself and about these products. Certainly some good information for people to learn.
Excellent. Thank you very much, Ryan. Have a great weekend.
Thank you. And thank you all for listening to the Caregiver's Toolbox, Tools for Everyday Caregiving. And I wish you the best on this weekend, and we will see you on the next one. Have a good day.